Good afternoon. It's Jeffrey Christian of CPM Group. It's 10 minutes after 1 o'clock in the afternoon on Friday, the 30th of May, 2025, here in New York. I've got a lot of ground I want to cover today. There's a lot of things happening. I will apologize right now. I have 2 pages of notes that I scribbled to myself to make sure that I cover all of the things I wanted to talk about. But we released our Silver Yearbook for 2025 on Tuesday, and it's really worth seeing. I want to talk about the creation of CPM Group because this is the day that I mark as the 39th anniversary of the creation of CPM Group. And I'll tell you why I use the 30th of May as that in a second. Talk about the Personal Consumption Expenditures report that was released today by the Bureau of Economic Analysis. It's important because of what it shows about the economy and also because the PCE price index is something that the Fed tends to look at more than the CPI and PPI. And then I'll talk about the markets and perhaps go into more details in some ways than I have been talking about the markets. As we speak, I'll just say that the price of gold is off $40 today. It had gotten as high as $3,347 earlier in the morning, but right now it's about $3,303. Silver is at $33.15. It had gotten up to about $33.47, almost exactly 1/100th of the price of gold. Platinum and silver is also off about 27 cents now. Platinum's off about $23 at 1,056, and palladium's off $15 at $963 right now. As I said, the CPM Group Silver Yearbook has been released this week. It's 247 pages. It is the definitive statistical and analytical review of the current silver market with a tremendous amount of historical data and a tremendous amount of analysis that will help everyone that reads it understand better the fundamentals of the silver market and the price-making dynamics of the market. It's been around for a long, long time. It started off at J. Aron in the early 70s, late 60s, early 70s, as the J. Aron Review and Outlook. And it's gone through various permutations as the research department has gone through various ownerships. You should buy it. It's $160. There's a link to the CPM store where you can buy it, download it as an ebook. It is full of accurate, unbiased, non-marketing information on the silver market. It has this chart in it. This is a chart that you've probably seen before in these presentations. It's gross and net silver investment demand are rising. And this chart actually goes through, it shows our projections through 2027, and it appears in the gold yearbook or the silver yearbook this year. And you can see how investment demand on a net basis had gotten very low, 40 million ounces or so 2 years ago. It rose to about 72 million ounces last year. That's the net. And as I explained in a video, I believe last week, you had serious amounts of silver being sold in those 2 years by disenchanted investors, so that the net silver purchases by investors as a group was very low because you had net gross sales coming into the market offsetting the gross demand from investors. We believe that that period of disenchanted selling by stable investors is pretty much over, so that we think that this year, next year, and the next year into 2027, we'll see much higher investment demand on a net basis because the gross sales will not be offsetting gross purchases, and that probably will propel prices higher over the current year and the next couple of years. It's a point that we've been making repeatedly. But this is all explained in the Silver Yearbook, which you can buy. I mark May 30th, 1986, as the day when CPM Group was created. But I'll give you a little bit of history. I started off as a business journalist covering commodity markets and international politics and industrial business in the 1970s. In 1980, I moved over from journalism to analysis, and I was hired by J. Aron and Company, which was an independent trading company, commodities trading company, uh, trading in precious metals, as well as coffee and some other commodities at that time. We moved into petroleum trading and became one of the largest participants in the oil market by the mid 1980s. I started at J. Aron in 1980. Toward the end of 1981, J. Aron was bought by Goldman Sachs, and what was the research department at J. Aron became the Commodities Research Group within the investment research department at Goldman Sachs. The blue report on the left here is what the J. Aron reports looked like through, say, 1983 or so. And around 1984, 1985, we moved to this thing in the green called Precious Metals Research. That was the Goldman Sachs style of the reports. When we left, we created a precious metals surveys on gold, silver, and platinum group metals. They were quarterly reports. The silver thing in the center is an example of an early one of those. And we had those as quarterly reports until 2001. And around the time of the attack on the World Trade Center, we shifted to just doing annual reports. John Wiley wanted to publish them as hard-covered books and asked us to change the name to the Silver Yearbook as opposed to the Silver Survey, and we did. In the interim, in the late 1980s, the Silver Institute hired us to produce the World Silver Survey for them, and you can see an early version of that. We did that for 5 years before ending the relationship with the Silver Institute. And we have the Silver Yearbook continuing. So J. Aron started a research department in the late 70s. I assumed control of the research in 1980. In 1981, we were bought by Goldman. In 1983, we had a massive cutback and staff reduction at the J. Aron division. I did not exactly enjoy that. In 1984, there was another 15% cutback across Goldman Sachs. I took the opportunity to say, here's my budget with a 15% reduction, and here's my budget with a much larger reduction. And the partners to whom I reported said, what do you mean? I said, if you allowed me to take the Commodities Research Group and spin it out of Goldman Sachs and create an independent commodities research and consulting company, literally moving across the street from 85 Broad, where Goldman was at the time, to 90 Broad, I actually looked at the real estate costs. I can reduce my budget significantly, and you can buy the research that you want, and I can, find other people to buy other research to cover my budget. That was in late 1984. They said no. They gave me a raise. They gave me a bonus. They gave me a physical. They may have even given me a bigger title, but I think that actually came earlier. But they said, no, we want you guys to stay internal and exclusive to Goldman Sachs and J. Aron. That was in late 84. In early 1986, I refloated the idea and they said no. But in the middle of 1986, specifically on May 30th, they were in the process of laying off half of their metals trading staff. And they said, given that we're cutting back on our metals trading operation, it doesn't make sense to have this big budget of commodities research, fundamental commodities research, cobbling up statistics on gold, silver, platinum group metals, and other commodities that we had expanded into. It doesn't make sense to have that. So let's talk to Jeff about this idea that he has of spinning the Commodities Research Group off, setting up as an independent company that we would hire and outsource our commodities research. And they came to my office on May 30th, 1986, and said, Jeff, give us that proposal, which I did. We negotiated for a couple months and we reached an agreement, I believe in late July, early August, and started CPM Group. So I mark May 30th as the day that CPM Group was created, because that was literally the day that I walked out of Goldman Sachs. I continued to use my office there for a couple of weeks until I found other office space. But that was the day that literally they struck my bid. As I said, we are a commodities research company. We do a lot of basic data. We've been around for a long time, 1986 as an independent company, but really going back to the 1970s. CPM Group was created in 1986. That was before the World Gold Council existed. That was before the London Bullion Market Association existed. That was when a lot of these guys who hold themselves out as experts were leasing cars or selling stereos out of their trunks or not even in school yet. We've been around for a long time, and we have established ourselves with a very credible record for accurately calling supply, demand, and price across markets. And I'll get back to that in a little bit. A lot's happened in 39 years. We were talking about it, my crew, my partners, and I, this morning in our morning meeting, and I said, yes, a lot has changed in the last 39 years, but let's think about the changes that could occur in the world and in the precious metals over the next year. By the time we reach our 40th anniversary in May 30th, 2026, I think the world and the markets are going to be even more different than they are today. So yeah, I'm proud of what we've done and what we've made. Let's turn to the disposable personal income. These are the personal consumption data here. The blue is percent change from the previous month in disposable personal income. And you can see that it's been relatively strong February, March, and April. And it was up in April quite a bit, 4% from March. But the orange part is the outlays, what people are spending. And you can see a very sharp decline in the growth rate from 3.5% to 1% in March to April in the amount of money that people were spending. And that then gets reflected in that black line, which is the personal savings rate as a percent of disposable income, which rose from a little over 4% in March to a little bit under 5% in April. People are conserving money in anticipation of economic pain. And this is supported by other data, for example, people's attitudes about their well-being, about the state of the economy, and other things too. So you see people gearing up for recessionary economic conditions. The PCE price indices, the orange being the total indices, the headline, and the PCE blue excludes the more volatile food and energy. You can see that they've basically been flat to modestly lower over the last several months, really over the last year. So we've seen a little bit of a reduction in the inflationary pressures in the PCE index, both indices, both headline and core. These are two charts that one of our clients asked us to do. These show, we have trade recommendations that we produce for gold, silver, platinum, and palladium. These are ultra short-term trade recommendations for very short-term trading-oriented investors. And they typically have a time horizon of 1 to 2 weeks. The last ones that we did were on the 19th of May, and we had projected through May 30th. So we will be producing this afternoon new trade recommendations for platinum, palladium, gold, and silver with a 2-week horizon again. But people said, well, how have you done in terms of accuracy? You sit there and you say, for example, I'll just give you an example here. On May 19th, we issued a buy recommendation for gold. The price was $3,235, and we said we thought the price could go to $3,350 between the 19th of May and the 30th of May. The price actually got to $3,366 on both the 26th and the 27th of May. So our objective, buy with an objective of 3,350 was reached. That's a good correction or a correct correction. So we said since January of 2023, these actually the trade recommendations actually go back before that, but we had already given the client data through the end of 2022, so they wanted the data since then. Since the beginning of 2023 through the middle of February, our short-term, ultra short-term trade recommendations were right 57% of the time and wrong 43% of the time. For silver, it was 54% and 46%. So somewhat better more often than not. The adage in the markets is that if you can be right more than half the time, you're really beating the market. And all of the data on how people perform supports that view. Turning to the markets now, we've seen gold, as I said, it got up to $3,366. It's come back off to about $3,303 today. Our trade recommendation today, just to tell you, will be to buy gold at $3,303 with the idea that it could reach $3,350 again over the next 2 weeks or $3,400 over the next 2 weeks, with the idea that the price could actually move even higher by the end of June as we move toward the active July silver contract. It's basically all continued. It's all contingent upon what we see as continued, renewed risks, uncertainties, and anxieties in the financial markets and on the part of consumers and business people as the Trump administration recoils and reorganizes itself for a renewed round of efforts. And they'll be doing that in the face of increased opposition on the part of congressional groups. Congressional Republicans some of them are starting to find a backbone. The courts are starting to find a backbone. Consumers and business leaders are starting to speak out, as are universities and citizens. And internationally, they're finding more opposition. And that they expected that, and they expected to sort of reorganize, recoil, and then come back even stronger. And we think that that's going to continue to create a tremendous amount of uncertainty and anxiety on the part of investors, which will be reflected in stronger gold prices. So that's where we are right now, hovering and consolidating around record levels. For silver, our last trade recommendation on the 19th was that the price was $32.49. And we said, you wouldn't probably want to buy at $32.49, but if you see prices dip, you should buy some silver with the expectation we had an upside target of, I believe, $33.50 at the time. And the price, that was on the 19th. 2 days later, the price fell to $32.13. So it was off about 50 cents, 40 cents. But then within 2 days, it had risen back to $33.92, almost $34. Then it came back off, and on the 27th, it reached $32.88, fell back below $33. And on the 29th, it touched $32.80. But then over the last couple days, it got back up to $33.66 yesterday as an intraday high. And when I looked at it just before I started recording this, it was 32.47. So back where we started. Our recommendation is more of the same. Buy on the dips, expect the price to rise. We will increase our target from 33.50 to 33.75 and say, we could see $34 over the course of the next 2 weeks. And we wouldn't be surprised to see $35 by the end of June. So we're looking for somewhat higher prices. Platinum and palladium, we continue to say, let's hold. You can see the price did rise sharply. We had thought it would decline in the last 2 weeks of May, but rather than fall, we had a target. I can't remember what our target was, but instead of falling, the platinum price rose sharply. It rose sharply on a couple of things. One was the release of various marketing documents that talked about these non-existent deficits of platinum. Platinum is in a surplus, and it's going to continue to be in a surplus. And the surplus of newly refined metal over fabrication demand this year is much larger than it was last year. So there's more downward pressure on prices, and that reflects primarily some increases in supply, but more importantly, it reflects weak markets and weak construction of automobiles. Platinum, palladium, and rhodium, the major uses of all three metals, is in automotive catalytic converters. And the auto industry continues to face a series of cyclical and secular long-term headwinds that are reducing the number of vehicles being bought and consequently the number of vehicles being built. And there's a shift within that to a greater proportion of those vehicles being built and sold being electric vehicles that don't use PGMs. So you have headwinds in the platinum market, but you saw people talking about deficits, and you heard a lot of marketing hype about jewelry demand in China being very strong. Although if you looked at the actual data, it wasn't particularly strong. And there hasn't really been a tremendous substitution of platinum jewelry away from gold jewelry. There's been some, but it's probably less than a ton, less than 32,000 ounces, roughly speaking, in terms of Chinese jewelry demand. So there's been a lot of hype, which helped push the price up. Price got up to $1,104 over the last couple of days. It's come off today. Our expectation is, well, we look at that and we can see, okay, we got up that high in the second quarter of 2024 last year. And if you look at the longer term chart on the right, you can see, yeah, we've gotten up that high a couple times, and a couple times, 3 times, we've gotten up to $1,200 on short-term spikes since 2016. But the platinum price has basically traded between $800 and $1,100 for most of the last 10 years, since 2015, 2016. So our expectation is that that probably continues. The range did move higher, so it's 900 to 1,100. Our expectation is that that range will continue to hold, that the price reached this high and is probably going to back off. So we have a sell recommendation. The price is around $1,057 today, and our target is $1,100. But our broader target is that it stays within that range of 900 to 1,100 or 1,050 on the upside, about where we are now. So that's that. And then there's palladium, which is very similar to platinum, although we did have this large period from 2019 through 2022 of much higher prices. But since that time, you've seen palladium trade in a narrow range, again, 900 to 1,050, a couple spikes higher, a couple spikes lower. Our expectation is that palladium will come back down, and we're looking forward to possibly get down to around 940, maybe even lower over the next 2 weeks, as the price normalizes there. We issue our trade recommendations with stop loss recommendations as well for those people who want to use it. And 2 weeks ago, when the price was around $978 an ounce, we thought the price would fall to around $955 an ounce, and we had a sell recommendation. The price rose to $1,055 over the next 2 days. That would have triggered a $1,000 stop loss order that we had recommended in there. If an investor had done that, then they would have been out of the market. If the investor had not done the stop loss selling at 1,000 and had held that short position, the price got down to $958, I believe yesterday, and I think it got down to $960 this morning. In fact, I know that. So it would have been back down at that target. Our expectation is that the price is going to continue to trend lower. That's about all I have to say. There's one thing I didn't say back when I was talking about CPM Group and who we are and what we do. I didn't talk a lot about what we do. One of the things that has happened over the last 39 years, and really has happened over the last 3 millennia, there's an eternal presence of misinformation and misrepresentation in the gold and silver and PGM markets. There are a lot of people who are not what they say they are. Oh, I used to be a trader at Aron, one of them says. Actually, he leased automobiles. Yeah. CPM Group is an easy target because we speak the truth and we speak it from a position of knowledge. There was a guy at GATA who challenged us to a debate twice in 2010 and I think 2011. We tore him apart. Somebody else said, well, I should debate him. And the guy from GATA said, don't debate Jeff Christian. He comes with a bunch of facts and information. And it makes debating him difficult. And that's how we are. I heard just today, this morning, somebody told me that someone was bad-mouthing us, inferring nefarious intentions on the part of something that we've done. In fact, we didn't do it. It's talking about us trying to hide reality from the market. If anything, what we've done is radically increase the transparency and knowledge in the market to the benefit of everybody who listens. If you don't want to believe it, you don't want to believe it. And there'll always be people who will lie about us because that's what they do. I can't help them. And I can't help people who are true believers. I can help people who want to know what's really going on. And if you really want to know what's going on, you buy our Gold Yearbook, which came out in March. You download it and you read it, and you study the numbers and the charts and tables. And you buy the Silver Yearbook that came out today or this week, and you read it and you study it very closely. And then you'll know more about the market than the people that you're listening to who will tell you that silver is going to explode to the upside and the monetary system is collapsing, et cetera, et cetera, et cetera. There's just so much garbage out there. When Aron was bought by Goldman in 1981, one of the first things that happened was I became a Goldman employee. And I went over and had lunch with the 2 partners that I would be reporting to at Goldman Sachs the day that they announced that we would be bought by them. Before the transaction was actually concluded, I became a Goldman Sachs employee. And as I was meeting one of them, who still is a very good friend with, I believe, a great deal of mutual respect between the 2 of us, he said, I want you to understand, I was the most vociferous opponent to Goldman Sachs buying J. Aron on the executive committee because I think that gold is a religion, not an investment. And I said, well, for many people, gold is a religion. but I think you'll be very impressed by the quantitative research that we do that shows that even though the market is overrun with people who have beliefs about gold and silver, if you know what's going on, you can beat the market consistently. And he said, no, I won't be impressed. But that's true. And I have to say, giving credit to the partners at J. Aron, when they created the investment research department in the late 1960s and hired Erwin Schisco to run it, they did that predicated on the concept that these markets are incredibly asymmetrical. There's a tremendous amount of misinformation in them, and there's a paucity of well-distributed, good, accurate information. And the J. Aron people said, if we can have a research department that just gives us somewhat better information about precious metals, we can consistently best the market. And they proved that in the 70s, and they proved it in the early 80s. And CPM Group since 1986 has continued to prove that thesis. Good information, unbiased information, accurate understanding of what's really going on in the market, supply, demand, investment demand, inventories, and the relationship between these markets and the broader economic and political world allows you to do very well investing in precious metals. I know, and I know from experience, not just the last 39 years, but my involvement in commodities research started in 1975 while I was still in university. And since that time, I have known that if you can get on the right side of the information and you can get rid of all of those garbage beliefs that you hear and pay attention to the data and what's really going on, if you study Money and Banking 101, you can beat the market. Because the thing that this guy said about us today was really an explanation of Money 101, Banking 101. It's very funny because talking to my colleagues and the person who pointed it out to us, I said, it's really basic bullion banking. And he said, no, it's basic banking. That's how banking works. And if you want to be a Luddite and say that we shouldn't have fractional reserve currencies and we should settle with world GDP growing at 1% per annum or less, the way it did for about 1,500 years until around 13th, 14th century, then you can beat the market. But if you want to get rid of those ancient Roman beliefs and you want to look at modern economics and finance, you've got to know what you're doing. And if you do know what you're doing, if you spend the time reading about this stuff instead of watching pablum on television or on the YouTube, then you can beat the market consistently. You can generate real long-term wealth, and you can live a comfortable and happy life. That's all I have for now. Take care of yourself. Read a good book this weekend. Try to do something good for people around you. Try to do something good for the world. And we'll be talking to you in June.